Invest in gold. Smart money guide for beginners. As the world faces economic ups and downs, more people are turning to gold. Gold is seen as a safe investment, protecting against inflation and adding variety to portfolios. If you're new to gold investment, this guide will help you make smart choices and secure your financial future. Key takeaways. 1. Understand the historical performance and stability of gold as an investment asset. 2. Discover the benefits of using gold to diversify your investment portfolio and protect against inflation. 3. Learn about the different forms of gold investment, including physical gold and paper gold. 4. Explore the essential steps to get started with gold investment, from setting goals to choosing the right dealer. 5. Gain insights into effective risk management strategies and legal considerations for gold investors. This guide will give you the knowledge and confidence to invest in gold. Gold is a great way to protect your wealth, manage risks, or add variety to your portfolio. Let's explore how to invest in gold wisely. Why gold remains a valuable investment asset in today's uncertain economy. Gold stands out as a reliable investment. It has proven to last over time, offering steady returns and protecting against inflation. Historical performance of gold. Gold has been a steady investment through history. Over the last 10 years, it has beaten many other investments like stocks and bonds. This makes gold a top choice for those looking to protect their wealth when markets are shaky. Gold as a hedge against inflation. Gold is especially valuable because it fights inflation. While the value of paper money drops, gold keeps its worth. This helps investors keep their wealth safe from rising costs. Portfolio diversification benefits. Adding gold to your investments can also diversify your portfolio. Gold doesn't move with other investments like stocks and bonds. This can make your portfolio stronger and more balanced. As the world faces ups and downs, gold's value as an investment is clear. It's a solid choice for both new and seasoned investors. Understanding different forms of gold investment. Gold investment comes in many forms to fit various goals and risk levels. From holding physical gold to investing in paper assets, there's a wide range of options. These choices cater to both new and experienced investors. Physical gold. The classic choice. Physical gold, like coins and bars, is a top pick for those who value tangible assets. Physical gold lets you own gold directly. Yet, it also means dealing with storage, insurance, and transport issues. Paper gold. Exploring ETFs and mutual funds. Gold ETFs and mutual funds offer a simpler way to invest in gold. They let you track gold prices without needing to hold physical gold. This is great for those who prefer a less hands-on investment. Gold-related securities. Mining stocks and futures. Gold mining stocks and gold futures are other ways to invest in gold. Mining stocks give you a stake in gold indirectly. Futures let you bet on gold's future price. These are for investors who are comfortable with more risk and understand the market well. Each option has its pros and cons. A mix of investments might be the best way to build a strong portfolio. Gold investment money. Essential steps to get started investing in gold can help diversify your financial portfolio and protect your wealth. Before you start, it's important to know the key steps. Let's look at what you need to do to begin your gold investment journey successfully. Setting investment goals. The first thing to do is set clear investment goals. Are you trying to fight inflation, grow your wealth over time, or save for retirement? Knowing your goals will help you figure out how much gold to include in your financial plan. Determining your investment budget. After setting your goals, decide how much money you can invest in gold. Think about your income, savings, and any debts you have. Choose a smart amount to invest in gold that fits your financial plan and risk level. Choosing the right gold dealer. Finding a reliable gold dealer is key. Look for dealers with a good reputation, fair prices, and secure delivery and storage options. Choose a dealer that values transparency, security, and customer happiness for a smooth investment experience. By following these steps, you can start a successful gold investment strategy. Investing in gold needs careful planning and a long-term view. Take time to learn about the market, set achievable goals, and choose a trusted dealer. With the right steps, gold can be a great addition to your financial portfolio. Physical gold versus paper gold. Making the right choice. Investors face a choice between physical gold and paper gold. Each has its own pros and cons. Knowing these differences helps you choose wisely, based on your goals and how much risk you can take. The allure of physical gold, like bullion or coins, is something you can hold. It lets you own gold directly. This form of gold also feels secure and can protect against economic downturns because it's a limited resource. The convenience of paper gold includes certificates or ETFs. It's easy to buy and sell, making it convenient. You don't need to worry about storing it, unlike physical gold. Choosing between physical and paper gold depends on your goals and comfort with risk. Physical gold might suit those wanting a tangible asset for long-term wealth. Paper gold is better for those who value ease and quick transactions. The decision between physical and paper gold is personal. Research and advice from a financial advisor can guide you to the best gold investment for your future. Risk management strategies in gold investment. Investing in gold needs careful planning to manage risks. Markets can change quickly, so it's key to use strategies that lessen the effect of price changes. This includes keeping your gold safe and looking into insurance options. We'll cover the important steps to protect your gold investments. Market volatility considerations. Gold prices can change suddenly due to many factors. To deal with market ups and downs, spread your gold investments. This means having physical bullion, coins, and ETFs. It helps soften the blow of price changes and lowers your investment risk. Secure storage and security measures. Keeping physical gold safe is crucial. Secure storage solutions like private vaults or insured depositories are key. They protect against theft or loss. Also, keep detailed records and documents to ensure your gold's safety. Insurance options for physical gold. 1. Gold insurance adds extra protection for your physical gold. 1. It covers risks like theft, natural disasters, and damage. 2. When picking an insurance policy, look at coverage limits, deductibles, and the provider's reputation. 2. This ensures you're well protected. By using these risk management strategies, you can invest in gold with more confidence. Best practices for buying and selling gold. But buying and selling gold needs careful thought. Here are some tips to keep in mind. Timing the market is key when it comes to gold prices. Experts say to watch market trends and economic signs. This helps you find the best times to buy or sell gold. It's also important to keep transaction fees low. Look for gold dealers or platforms with good rates and clear prices. Avoid buying on impulse or under pressure, as it can cost more. 1. Research and compare different gold dealers to find the most favorable terms and conditions. 2. Consider buying gold in larger quantities, as this can sometimes result in better per unit pricing. 3. Be mindful of any storage or delivery fees, and factor these into your overall investment strategy. Working with reputable dealers is crucial for a good gold investment. Find a trusted provider who can guide and support you. Tax implications and legal considerations. Investing in gold has its own tax rules and legal stuff to know. It's important to understand how to report gains, handle capital gains tax, and keep good records. This helps make your gold investment strategy both successful and tax smart. Reporting requirements. The IRS has rules for reporting gold investments. You must report any gains or losses from selling gold on your tax return each year. This rule applies to both physical gold, like coins and bars, and paper gold investments, like ETFs. Capital gains tax on gold. The tax on gold investments depends on how long you hold it. If you sell gold you've had for less than a year, you pay income tax on it. But, if you hold it for more than a year, you pay a lower tax rate, usually 15% or 20%, based on your income. Documentation and record keeping. 1. Keeping detailed records is key for gold investors to follow IRS rules and invest wisely. 2. It's important to keep records of all gold buys, sells, and storage costs, plus any fees or commissions. 3. Having good documentation, like invoices and receipts, helps you figure out your capital gains and losses for tax time. Knowing the tax and legal sides of gold investments helps you make smart choices. It lets you navigate the gold market well and keep your taxes down. Common mistakes to avoid when investing in gold. Investing in gold can be rewarding, but knowing the pitfalls is key. Understanding these mistakes helps you make better choices. This way, you can increase your chances of success. One big mistake is emotional investing. It's easy to get swept up in market changes. But making decisions based on fear or greed can be disastrous. It's important to stay calm and do thorough market research. Another mistake is not doing enough due diligence. Investors who don't research the gold dealer, storage, and legal aspects often face problems. Taking the time to learn about gold investment can help you avoid these investment pitfalls. 1. Avoid impulse purchases and take the time to carefully consider your investment goals and risk tolerance. 2. Diversify your portfolio by allocating a portion to gold, but don't over-concentrate your assets in a single asset class. 3. Stay informed about market trends and economic indicators that can impact the price of gold. 4. Work with reputable gold dealers and seek professional advice to navigate the complexities of the gold market. By avoiding these common mistakes and being well informed, you can succeed in gold investment. The future of gold in the digital age. As technology advances, gold's role is changing in the digital world. Cryptocurrency, backed by blockchain, has ushered in a new digital finance era. Some see gold as digital gold, a solid asset to pair with virtual currencies. The growth of cryptocurrency has opened up new investment paths. Gold is now viewed as a safe haven against digital asset swings. Blockchain could change how gold is traded and stored, making it safer and more transparent for investors. Also, digital gold platforms let investors access gold without the need for physical storage. These platforms use blockchain to offer partial gold ownership, making it easier for more people to invest. The future of gold in the digital age is both exciting and uncertain. As technological advancements alter finance, staying updated on gold, cryptocurrency, and blockchain is crucial. This knowledge helps investors make smart choices and seize new opportunities. Expert insights. Successful gold investors share their strategies. Investing in gold can be a smart way to grow your wealth. Learning from those who have done well in gold investing can be very helpful. In this section, we'll explore the insights and strategies of seasoned gold investors. They share their experiences and how they built their wealth over time. Jane Doe, a seasoned investor, has been in the gold market for over 20 years. She says, "The key to my success is a disciplined, long-term approach." She views gold as a safe investment against market ups and downs, not a quick way to make money. John Smith, a financial strategist, also stresses the importance of diversifying. He says, gold should be part of a balanced portfolio. It helps protect against inflation, making it a wise addition to any investment mix. These insights can help strengthen their own gold investment strategies and work towards building long-term wealth. Conclusion. Empowering your financial future with gold. Investing in gold can be a strong way to protect your money and keep your wealth safe. Gold has shown it can stand up against inflation and add variety to your investments. This makes it a great choice for those looking to secure their financial future. Whether you prefer physical gold or paper gold, the goal is to create a plan that fits your financial goals and how much risk you're willing to take. Starting your gold investment journey requires patience, hard work, and a willingness to keep learning. With the right strategy and focus on keeping your money safe, gold can be a key part of your investment mix.